use Facebook. See how it's going. Yep, I'm seeing it on Facebook. I'm just going to copy the link over. Fine. So that's that. And I'm going to let everyone in. And I'm going to turn off the waiting room. I'm going to make sure that everyone is muted. So I'm going to mute all.
Okay.
And right. So people cannot unmute themselves and mute upon entry. All right. So that should be fine. So welcome, welcome, welcome. HPJ.tax. We do these live streams every week. So to find out what's next, just go to our website, HPJ.tax, so on Facebook or wherever it is that you found this. So we do this every week. Today, we have the honor and the privilege of speaking with and hearing from Ricky Gutierrez-Becker, who's going to talk about taxes in Spain. So I just want to make you aware that this is not to be construed as advice. We're going to have a general conversation about general principles. And what we are hoping that you would do and take away from this is an understanding of what the key issues are that you need to keep in mind as you select your preferred tax advisor. But this is not advice. You can consider it educational or you can consider it entertainment. But it's about equipping you, hopefully, with the tools that you need to make the right decisions in terms of, getting advice from someone who knows the situation inside out. This is being recorded, which should have been signaled to you on the way in. If it is, you do not want your image to be captured. You just need to keep your camera switched off. Otherwise, it'll be captured for posterity. And it is available for those who did inquire. It's available on our website as well as YouTube, SoundCloud, iTunes, Amazon, basically Spotify, wherever it is you get your preferred podcast, this will be made available as well within a day or two once it's processed and uploaded. So if you have any friends or colleagues that can make it, just let them know that it will be available, the recorded version, either as a podcast or as a video recording. They're both available. So without further ado, I turn you over to Ricky. Ricky, the stage is yours.
Okay. So, well, my name is Ricky Gutierrez. I'm from Barcelona, Spain. And basically, I'm going to be talking about Spanish taxes for expats. Well, I actually work at a tax accounting and law firm in Barcelona, Spain, Gutierrez and Partners. The company is already 35 years old, so there's a lot of experience in this company, and there's a lot of people besides me that they know a lot about the Spanish taxes, and also we are also mainly focused on international. So basically, the first thing, the Spanish tax here, how it runs. The first thing you need to know is that in Spain, taxes are a little bit complex because you have to differentiate between state tax and also region, because depending on the region you live in Spain, taxes might be higher or lower. Failing to file your taxes in Spain, you can have severe fines and penalties. So we always recommend filing taxes rather than to avoid filing and paying. The Spanish tax year, it runs from January to December. And one of the huge benefits that we have in Spain is that we have double taxation treaties with over 100 countries, which is pretty good. The two most important taxes for individuals are the income tax and also the wealth tax. One of the most important things to know is where am I tax resident? Here we are based on 3 rules. The first rule is the substantial present test. The substantial present test says that whatever you have spent more than 183 days, if you have spent more than 183 days in Spain within a single calendar year, this means that you are Spanish tax resident. The second rule is the center of economic interest. This means where are your primary activities, if they are conducted in Spain, if all your incomes come from Spain. That's the second rule. And lastly, we have the presumption test. The presumption test is where are your main interests. So let's say that your wife, your children, they are living here, they are all going to school here. This will make you dependent on you, and this will mean that the tax authorities say that you are Spanish tax resident. One thing to know is the quarantine rule. Let's say that you are Spanish tax resident and you move to a tax haven. Well, with this rule, the Spanish tax authorities, they can tell that you are Spanish tax resident for the year you're moving and the 4 years after. The income tax. This is the, let's say, the biggest tax for individuals in Spain. Well, Spanish tax residents, they pay income tax on their worldwide incomes. And non-residents, they only pay taxes on the incomes that they have generated in Spain. For tax residents, they are allowed to deduct the expenses they have, while non-tax residents, they can't. The tax rate for EU non-tax residents, it's 19%, and for the rest of the world non-residents, it's 24%. The income tax is split into 2 categories. We have the general activities, and then we have the savings. In some regions in Spain, as mentioned before, they have lower taxes. And in one of the regions, like Navarra and the Basque Country, they have some special tax regimes where they kind of control their own tax system. In Spain, as mentioned earlier, there are some regions that the taxes are lower. For example, in Madrid, taxes are lower than in Catalonia, and the income tax in Catalonia can go up to 54%. People that they earn really high salaries, or they have like huge incomes, they would be in the progressive tax rate of between 50 and 54%, which is very high compared to other countries. One of the parts from the income tax, the income from savings. Basically, income from savings are interest from savings, dividend payments, income from life assurance policies, income from annuities, and also gains that are made from the disposal or the transfer of assets. Since 2016, these are the rates for the savings part. It goes from up to 6,000 or 19%, from 6 to 50,000, 21%, 50 to 200,000, 23%. And then there was a rate that was added in 2021, that it was incomes over 200,000, they are in the 26% rate. And the general part of the income tax. General income are income from employment, say salary or wages, pensions, and also income from rents. And also here are the tax rates that you can see. Incomes up to 12,000 or 19%, 12,000 to 20,000, 24, and up. And it can go up to 45%. Personal allowance and deductions. As mentioned earlier, only Spanish tax residents are allowed to have deductions on their income tax. Some of the allowances or deductions that people can apply is for people that are over 65 years of age. They have some deductions. If you have some people that are living with you, you can have some deductions as well. If you have children that are under 25 and they are also living with you, you can have some deductions as well. Wealth tax. Wealth tax is it's a pretty known tax here in Spain, because in some regions in Catalonia, well, there's only one region in Spain, sorry, which is Madrid. In Madrid, they do not have wealth tax. That's a little bit controversial, because then you have the other regions in Spain that they have wealth tax, and it's a little bit of a controversy, because then you have a lot of people moving to Madrid because they do not have wealth tax. But at some point, the Spanish government, they were thinking of putting wealth tax again in Madrid, but we'll see. So basically, this tax is designed for people who have a lot of they have a lot of significant worldwide wealth. The declared assets after tax allowance of 700,000, but in Catalonia the tax allowance it's only up to 500,000. 300,000 tax allowance for primary resident in Spain if you are tax resident in Spain, and the tax rate, it goes from 0.2% to 2.5%. And also, as mentioned, in Madrid there's no wealth tax. Form 720. Form 720 used to be a very important form. I mean, it still is. And it's an overview of the individual's worldwide assets. Basically, it's just a picture of the assets that a person has before moving to Spain. So individuals that come to live in Spain and become Spanish tax residents, they have to declare all the assets abroad that are worth more than 50,000 euros. In the previous years, failing to file this form or informing incorrect information, people used to incur really high penalties. But the beginning of this year, the European Union Court of Justice, they decided to stop or to kind of like ban all the penalties from this form, because the penalties were like extremely high, and they didn't think it was fair enough for people. So nowadays the penalties for not filing or filing things wrong are very, very low. I mean, early in the days they used to go up to like 50,000 euros or more, and nowadays if you fail to file Form 720, you only pay around like 250, 300 euros. So, but still, it's worth to file this form, because here you have to show all the assets that you have, and it is good for the tax authorities to know all this information, because in the future, if people were to sell this some of the properties, then you would have to justify the gain, and the tax authorities, their information comes from the 720. Property tax. Owning a property and living in there from January 1st, you are subject to IBI. It's called Impuesto de Bienes Inmuebles. This tax, it applies for both residents and non-residents. We also have rubbish collection tax, and there's also transfer tax, for example, when you transfer or you sell a property. Capital gains. Basically, capital gains are taxes on the profits from selling a property or other investments. Tax residents, they pay capital gains on the disposal of any of the worldwide assets, and the rates are 19% for the 6,000 profit, then 6 to 50, it's 21%, 50 to 200,000, it's 23%, and also the last one that was implemented in 2021, it was up from 200,000 upwards, it's 26%. For non-residents, they pay capital gains on all the gains that were made in Spain, and there's only a flat rate of 19% for EU residents and 24% for non-EU residents. In Spain, we also have inheritance and gift tax. this tax is kind of complex because it's hard to calculate the right percentage, but well, individuals are subject to tax when they transmit or they give an asset. Tax residents, they can be taxed on their worldwide incomes, as mentioned earlier, and non-residents only on their Spanish assets. In this kind of tax, there can be some reductions applied, and some of them they are based on the degree of kindship. There are also some deductions that you can apply in this tax that can lower the tax you pay. Another important tax in Spain is the corporate tax. Currently, the current tax rate is 25%, but you have to know that newly formed companies, they only pay 15% for the first 2 years. Then they go up to 25%. Basically, the calendar year for corporations, it goes from January to December, and the tax is paid July 25th of the following year. Some special tax regimes for holding companies. I mean, nowadays in Spain, we have different types of group structures. You have the vertical structure, horizontal, and also hybrid. Dividends in Spain, there used to be 100% exemption until 2020, but in 2021 they decided that instead of 100%, it would be 95%. The most known or the well-known the Spanish holding company is called ETVs. It's a Spanish holding company. Dividends received from a non-tax resident company, they can apply for the 95% exemption. As you can see on the right side, there's the example of the structure. So there's a foreign company, the ETV, and then you have the foreign tax resident. There's no withholding, and the shareholder needs to be non-Spanish tax resident. And of course, these kind of companies, they can benefit from the double taxation treaties. And lastly, I'm going to speak about the special tax regime for foreign people that they want to come to live in Spain. It's very well known. It's called the Beckham Law. Basically, this law, it enables foreigners that they want to move to Spain to just pay 24%, a flat rate of 24%, instead of going from to a progressive tax rate like Spanish tax residents. Basically, with the Beckham Law, you only pay the 24%, and but it's up to an amount of 600,000, because this law used to be very common or very used for very rich people, but a few years ago they decided that no, it's only flat rate up to 600,000. If you go over 600,000, then you enter into the progressive tax rate, and you kind of have to pay as if you were a Spanish tax resident. The Beckham Law, it only lasts for 6 years. So the year you become Spanish, you get to Spain, and the following 5 years. So in total, 6 years. And there are some requirements. Basically, the expat can have been resident in Spain during the past 10 years. So you can be Spanish national, but if you haven't been resident in Spain for the previous 10 years, you can apply for the Beckham Law. The foreigner must have a job contract and signed by a Spanish company. Directors of companies cannot possess more than 24% of the company. And finally, the core of the workers' professional activities must be in Spain. And basically, that's it. I mean, if you have any questions, I'll be more than glad to answer them.
Thank you very much, Ricky. Appreciate it. That's a pretty comprehensive overview. I'm sure everyone recognizes that. Now, if you have any questions, we invited you by messages on Eventbrite and then by email to submit questions. So we did get some questions. If you didn't get a chance to submit your question, feel free to type in the box below and we get to them in the order in which they receive. So, Ricky, I'll go through the questions that were previously submitted. So,
Okay.
I understand that because of Spain's history, there's certain
Hmm.
nationalities that get a fast track when it comes to citizenship. So typically, you need to be resident in Spain for, is it 5, 10 years
Well,
before
you
you
mean
can
to get the nationality in
to
Spain?
get correct? Yeah.
I mean, well, there are different kind of visas that you
Hmm.
can apply to Spain, but I
Hmm.
mean, the most common is the golden visa. Once you get the golden visa, basically
Hmm.
you become Spanish national.
Hmm.
I mean, I wouldn't say that that there are nationalities that they get fast
Hmm.
track because here in Spain it's very common for a lot of Latin America to come to Spain.
Exactly. Yeah.
You have these rich people that they
Hmm.
they are from Colombia, Venezuela,
Yeah. Yeah.
and they just want to get the Spanish passport. Most
Hmm.
of them they just come through the golden visa. With the golden
Hmm.
visa, you need to make an investment of €500,000.
Hmm.
Or you can either just deposit the money in a bank account, or you can
Hmm.
make an investment, let's say, buy a house or
Hmm.
or yeah, basically make an investment. But I wouldn't say that there's like a nationality that gets like fast tracked. Probably if
Hmm.
you are from the EU, maybe you have like a better chance
Hmm.
to become Spanish national.
Hmm.
But I mean, I don't really know a lot of people from the EU that they just want to become Spanish national because
Yeah.
basically they already have the all the EU benefits. So
Exactly.
I would say it's more for Latin America people.
Right. And from Puerto Rico as well, because of the history. I understand from speaking to people from Puerto Rico.
Yeah, and yeah,
Yeah.
of course, also
Hmm.
for the language. I mean, people they
Hmm.
they feel more comfortable speaking
Yeah.
speaking Spanish. So yeah,
Okay. Right. Okay. So I'll move on to the next question, which is about the quarantine rule, right?
yeah.
So, so basically, if it is that, how does it work? If it is that you go to any jurisdiction that has a lower effective tax rate than Spain, or does it have to be one of the
No, no.
blacklisted
Yeah,
jurisdictions?
if it's a blacklisted jurisdiction, so let's say someone that is Spanish tax resident, they want to move to, let's say, to Ireland. They won't have any issues with that. I mean, they can. Of course, we always recommend doing some tax planning before to see how is it going to affect them, the fact of moving to another jurisdiction. But if you go to some place with a low taxation, that's
Mhm.
no problem at all. But if you go to a tax haven that pays nothing, then the Spanish tax authorities for sure will come to you and they will come claiming uh, the taxes that you're not paying in this other country. And
Right.
as mentioned, it's the first year you get to the other country and the following 4 years. So in total, it's 5 years. Yeah.
Mm. Okay. So that would also include uh l- low tax and no tax jurisdictions like the UAE, Dubai, United Arab Emirates, uh
Yes,
the
probably.
Dutch Caribbean, the Bahamas, Barbados, lots of Caribbean islands. Basically,
Yeah.
lots of nice places on
Yeah.
that list. Okay, gotcha. Now, then the follow-up question from that is, how would Spain know that someone has moved to, let's say, Dubai or the Bahamas?
Well, basically, because whenever you move to another country, you have to inform the tax authorities that for the following year you will not be tax resident. Otherwise,
Mhm.
they will, if you don't inform them, they will come to you and they will
Mhm.
send you like a letter. Hey, you
Mhm.
haven't filed the income tax for this year. Why aren't you filing this year?
Mhm.
Um, Always it's better to inform them in advance rather than them coming to you
Mhm.
asking for the information.
Absolutely. Yeah, absolutely. I think that's a cardinal rule when it comes to dealing with tax authorities. You are
Yeah,
proactive with them rather than waiting on them to try to hunt you
yeah,
down. Okay.
of course.
Now, from a tax planning perspective, are there any pre-exit? So if someone has been tax resident in Spain and they are
Mm-hmm.
considering moving to one of the low tax jurisdictions that are on the blacklist. Like, for example, Dubai. It's come up a lot with people asking us so about
Yeah.
this. Are there any strategies that they can use, or is it tough luck? You're going to be tax resident to Spain for the
No,
next
well,
X amount of
from
days.
I mean, I'm not very familiar from Dubai, but I know that
Mhm.
depending on the basically the region of Dubai,
Mhm.
I think some of them you are like taxed in some way, or uh, I mean, I'm more familiar with that for companies, not for individuals. But
Mhm.
I think there are some ways that you can do it without having this Spain coming after you. But of course, we just need to look at it. But because we
Mhm.
know some cases that they transfer from Spain to Dubai, and they hadn't had any issues.
Okay, so there are tax planning opportunities, but in order to
Yeah,
find out more, someone will need to reach out to you directly.
yeah,
Okay,
of course.
gotcha, gotcha. Now, what about the opposite? So someone is asking for the opposite. So they intend to move to Spain,
Okay.
and there is some concern, especially around wealth tax and stuff like that. What planning opportunities you think they should be considering?
Well, basically the protection of their assets mainly because whenever they become Spanish tax residents, they are going to be taxed on their worldwide incomes and
Mhm.
well, basically on everything, and their assets will be taxed on their wealth tax. I mean, we normally recommend working with if you have a lot of incomes and you have a lot of properties. We always recommend using companies. Um, because rather than you coming here and if you everything is under yourself and you are taxed under that and you have like really high
Mhm.
incomes as
Mhm.
mentioned before, well, as mentioned during the
Yeah.
presentation,
Mhm.
in some parts of Spain, for example here in Catalonia, people can pay up to 54%, which is really high.
Ouch.
And
Yeah.
then if you have a lot of properties, then the wealth tax that you're gonna pay it's gonna be like very very high.
Right. So one of the key planning strategies potentially from a wealth
Yeah,
tax perspective might be using a company structure, because if you have a
yeah,
company outside of the US, your investments in that company doesn't get used in the
yes,
calculation.
that is correct. Or the
Right.
other way would be moving to Madrid where there's no wealth tax, but
Right.
that's the but that doesn't assure you that in the
Mhm.
future that the tax authority, the Spanish government, they say, okay, now we impose wealth tax in Madrid as well. So
Exactly.
um,
And just for the record, Spain does not recognize trust because, and
no,
in common law
no,
jurisdictions, it's a common
in
tool.
yeah,
Yeah.
yeah, in Spain the figure of the trust is not recognized. I mean, we have had many cases for people from the US or UK that
Mhm.
they had the trust structure, and yeah, here it is not recognized. It goes directly to the main beneficiary of the trust. So
Gotcha. Okay. Another question we got was, what about someone who lives on the border between Portugal and Spain? So how are taxing rights assigned? Is it where they physically reside, or maybe where they work, if they work in one and reside in the
well,
other?
I mean, I would go to the basically the three rules I mentioned. I mean, I would go where does he spend most of his time? If he spends more than
Mhm.
183 days in Spain, he will be tax resident in Spain. But
Mhm.
I mean, it probably is the same in Portugal. And
Mhm.
then if we still don't know if we go from like the first rule and we still don't know if it's Spanish or Portuguese tax resident, then we would
Mhm.
go to the second one. Where is
Mhm.
his center of vital interest or economic interest? Like where is he working? Is he working
Mhm.
more in Spain or more in Portugal? And
Mhm.
then the presumption test, where's his family?
Mhm. Okay, that's perfect.
Yeah.
Thank you for that. Next question is about the Beckham law. Does the
Okay.
Beckham law apply to wealth tax? So does it exclude you from the wealth tax calculation as well?
Well, basically, for the Beckham law, it's as if you were not tax
Mhm,
resident in Spain.
mhm.
So basically, what is taxed under the Beckham law is the incomes that you earn in Spain.
Right.
So if you have wealth in Spain, yeah,
Mhm.
this will be taxed. But well, basically, that's it. But
Yeah.
it's only regarding like incomes. It's only to a flat fee of flat rate of 24%.
So 24%, it's income up to 600,000
Yes,
euros,
yeah. And then if you go over six
Mhm.
hundred thousand, then it goes to the progressive tax rate, which
which is up to
will
45.
be
Yeah.
probably 45, 50.
Gotcha. So then obviously it's a very attractive structure. How much
Yeah.
would it cost to implement a structure, roughly speaking, like that for someone who's interested?
Well, basically nowadays, what we have discussed, because we've had many individuals that they come asking for the for the Beckham law.
Yeah.
I mean, the thing is that it only lasts 6 years. So some of them they just set up a company. The only thing is that you cannot be the shareholder of the company, so you cannot hire yourself. So normally we use our services. We act as directors and shareholders of the company, and then we are in charge of hiring this person, so this person can apply for the Beckham law. Um, I mean, whenever we set up the company, we also sign a deed of incorporation stating it's a private, kind of like a private agreement, stating
Mhm.
that the true shareholder is the individual that contacted our services. So once the 6 years are done, then he can ask, okay, I want to start operating. I'm going to be a Spanish tax resident, but I still want to be operating through the Spanish company. This is the most common structure that we have found nowadays.
Absolutely. It's the most attractive structure
Yeah,
really for
yeah,
at
because
least for the first 6 years. Yeah.
yeah, of course, because a lot of people they just come here and they don't have a job contract. They don't have maybe some retired people that they have a lot of wealth or they have a lot of income from the US or from other jurisdictions, and they just want to transfer these incomes here to Spain. And that's one way to do it.
Absolutely. And roughly how much does it cost to set up? Ballpark, just roughly.
I would say mm, around 15,000 euros, more or less. Uh, but of course, if anyone needed this, if they needed this, I mean, we would set up a meeting with them. I mean, of course, we would explain everything in more detail, and we would send them a fee proposal all the with all the work that we would do, all the setup of the company, as being the directors, all the contracts, the hiring contracts, also taking care of the payrolls, everything. Yeah, we would set them a detailed proposal with everything, with all the works to be done.
Yeah. So in other words, it's not like, Portugal has NHR, Ireland has Res Non-Dom. It's not something that's really
No.
straightforward and simple. It's something that you require
Yes.
tailor-made. It's a bespoke solution
Yes.
to someone's
That
situation.
yeah,
Yeah.
that is correct.
Mhm.
That's why a lot of people, instead of moving to Spain, they'd rather go to Portugal. I mean, for individuals, we know that Portugal, that they do have some advantages over Spain, but still people want to come to Spain, so it's good.
Yeah. I mean, to be fair, in terms of our practice, the majority of people, even though there's an uptick in Portugal, the majority of people still
Hmm.
want to go to Spain for
Yeah,
a number of reasons. So anyway, next we have a few more questions.
yeah,
So
of
we have
course.
a question on US LLCs. So as you well, just to kind of create context. So US LLCs are a hybrid structure. So they are a limited liability company, but they are transparent. So the default, you can make elections under section C, so
Yeah.
it could be a C corp, section S, it could be an S corp, but essentially it's transparent. So it's almost like a partnership if there are more than
Mm-hmm.
one member, or it can just be like a disregarded entity
Mm-hmm.
if it's just a single member. So from Spain's perspective, assuming that you're not under the Beckham law, how does Spain reconcile or understand US LLCs which are owned by a Spain tax resident?
Well, basically, I mean, disregarded entities, I mean, I wouldn't say it's an issue, but it is a problem if someday the Spanish tax authorities that they come ask you about, they come asking about this company, because then they would say, please show us a tax return that this company for this company,
Right.
and if you haven't paid any taxes, then they will come claiming taxes for sure. So
Yeah.
we always recommend, whenever forming companies, in at least for our Spanish clients, we normally recommend C corps rather than just a regular LLC.
Yeah. So there's no doubt, there's no debate.
Yeah,
It's pretty much certain what it is. Okay.
yeah, and the
That's
thing is
good
that
to know. Yeah.
C corps are kind of like the SL here.
Yeah.
Um,
Hmm.
they have like a flat tax rate. I mean, well,
Hmm.
of course, you have the federal and then the state tax, but
Yeah.
um,
Hmm.
yeah, basically that's how it works here.
Gotcha. Okay. So that was a list of pre-submitted questions. So we have two more questions on Zoom. The first one, so Bruce is asking, can you explain how IRAs and Roth withdrawals are taxed? So these are US
Yeah,
private pension
I
plans,
know.
right? Yeah.
No,
Because we get
well,
this
now what?
question every time we
Yeah,
do this, someone we
yeah,
know. So
yeah. We are very familiar with this.
yeah,
So
yeah.
basically, you have to know that traditional IRAs and traditional 401ks,
Mhm,
they are taxed as pensions in Spain. So in this case, they are not added to wealth tax, which is a good idea.
mhm,
So you are only taxed, this will be taxed as income once you start making withdrawals.
mhm,
But if you have Roth IRAs or Roth 401ks, then these kind of pension plans, they are not treated as pensions as in Spain. So both of them are included under the wealth tax. And then once you also, of course, once you make withdrawals, they will be taxed under the income tax. But yeah, that's a huge difference between Roth and traditional. One of them, it's not taxed under wealth tax, and the other one it is.
right. And
Yeah,
for Bruce or anyone else who's interested, Ricky and I, we co-authored a pretty comprehensive article on
yeah,
US pensions and how they're regarded from a Spain perspective. But because just to add to what Ricky has said with Roths, right? Because it's after tax income that went in, there may be an exercise, an opportunity to really bifurcate the distribution to see what portion of it was the original capital and what portion is the return on capital. Being, if you could defend that calculation, then it's really the growth in the fund that is taxable to Spain, not the original after-tax money that you put in.
yeah.
So that could be a planning opportunity. So yeah, okay. We hope that helps. Next question. So someone else is asking, so for clarification, if someone living in Spain more than 183 days only has income from US Social Security,
Mm-hmm.
other government retirement pensions, and 401k and IRA, is this income considered taxable in Spain? Well, we already addressed the 401k, the IRA bit, right? So it's really the government stuff. Ricky?
Yeah, basically the government stuff. This kind of, I mean, they are not pensions, but
Mhm.
everything that comes from the government, I mean, we would have to look at exactly what kind of funds or what kind of income we are looking at, and we would also have to check if there's anything on the double taxation treaty between Spain and the US. But normally, or the cases that we have had here, this kind of income is exempt here in Spain. I mean, there's an informative note from the Spanish tax authorities that it kind of talks about private and public pensions. It says that public pensions are exempt here in Spain, but when they say public pensions, they mean people that has been working for the government. And then all the private pensions, let's say, private pensions, they are considered taxable here in Spain. So.
Right, and again, guys, I refer you to the article that we have on our website, HEJ.tax, that Ricky and I co-authored. It goes into a lot of detail, and I think it's super helpful because it's a bit nuanced. So, for example, if it is that your U.S. tax team is not familiar with international issues, it could get confusing because you're going to invoke the treaty, but the thing is that Spain, as Ricky has said, Spain does have taxing rights. So Spain will tax it, the private, the non-government stuff. And so therefore you need to use a certain US tax form called an 1116. And you make a special election on the 1116 that allows you to recategorize the income and claim the credit. You claim a credit for the taxes paid to Spain against your US tax liability. So there's a bit of tax gymnastics involved, so you probably want to speak to a tax team that understands both sides. So anyway, I hope that answers your question, sir or madam. You didn't identify yourself, but I hope this answers. I'll just do a quick check on Facebook to see what people are saying there. If there are any questions. Okay, nope, I think we're good there. Assuming that there are no more questions from this side from Zoom, we thank you. We appreciate you tuning in.
Thank you so much.
If you want to reach Ricky, what's the best way for people to reach you?
Well, basically the best way to reach us or to reach me is like through email. I'll just leave my email in the chat, and also you can contact me through our firm's website, which is www.gpasoc.com. I'll also put that on the chat for everyone.
Okay, so for those who may be listening and not able to see, so www.gpasoc.com. Okay, wonderful. Correct. And you get through to Ricky or the relevant member of his team. Okay, yep, gotcha. I see it. Okay, thank you for your time, Ricky. We appreciate you sharing your time and your insights. Have a great
Thank you so much for having me.
Hot day for everyone in Spain.
You too.
Okay, bye-bye.
Bye-bye, Darren. Bye.